Thank you, everyone, for joining this webinar. We appreciate your massive registration for the same. We understand there were more than 400 registrants for this webinar, which is of great pleasure to us. My name is Alan Nuke. I'm a manager within the International Finance Corporation, Financial Institutions Group, and I'm based out of Johannesburg, South Africa. We today have a webinar which is organized by the Africa Financial Industry Summit, which is a summit put in place by the Africa CEO Forum and part of the Genafrique Media Group. And this is the second of a series of 10 webinars, the first of which started in June this year, and meant to ultimately address the challenges linked to the financial inclusion in Africa, and overall, geared towards discussing how, the financial sector, the financial industry sector in Africa could be developed. AFIS has as an overarching theme to change the realities of African financing. And this webinar, which is focused on trade finance, aims to address challenges linked to the sizable trade finance gap across the African continent. The gap in trade finance is indeed sizable, as you will understand from the experts shortly. It is sizable in absolute terms. Africa only accounts for 3% of the global world trade. And what is also striking is that the intra-African trade is still very moderate. It barely represents 18% of the total trade in Africa, whilst we know that in other continents, whether it's Asia, the Americas, or Europe, the intra-continental trade typically represents more than 50%. So the gap is there, it is wide, it's concerning, and we are all here discussing as how do we curb this gap? How do we address the challenges represented by such a wide gap? And we would like at this point to express our many thanks to the International Finance Corporation, first of all, as a co-host for this webinar and overall partner for the Africa Financial Industry Summit. We would also like to express a warm thanks to the EcoBank Transaction and Incorporation Group, ETI or EcoBank Group, as being a partner to this event as well. It's important to note that you would be able to raise your questions, the Q&A section, in the Q&A sections of this Zoom call. And it's also important to know that this conversation will be live on Twitter as well through the hashtag AFIS Digital Events. We have been lucky for this seminar to have a host of senior presenters, speakers from a number of various organizations and the EcoBank Group, the Coronation Merchant Bank. We also have the International Finance Corporation, the Société Générale, ABSA, and the Congo Group. To get started with this theme and to set the stage for the discussion around the theme for this webinar, we would have to have an expert presenter to take us through the issues, the dimension and the issues relating to the African trade finance gap. Chinwe Eguim is the chief economist at Coronation Merchant Bank. And Chinwe will, through her presentation, then highlight this, how important is the challenges and the issues related to it. So without any further ado, we'll then kick off with Chinwe with her expert presentation.
Yeah, thank you so much for that, Alan. I'm going to wait for this first slide to come up. So the state of trade finance in Africa. Last year, Africa's total merchandise trade declined by about 16% year on year. So that's compared with the previous year, 2019. And about 40% of intra-African exports consist of manufactured goods, largely iron and steel, chemicals, and other semi-manufactured goods. Now, Algeria, Angola, Egypt, Libya, Morocco, Nigeria, and South Africa are among the region's leading players. Collectively, these countries account for about 60% of the region's total trade as at last year. Now, based on the latest Afri-Exim Bank Trade Finance report, trade finance gap in 2019 was estimated at as high as $81 billion, representing 5.5% of the global trade finance gap. On a micro level, SMEs account for about 80% of all private enterprises in Africa. However, the average rejection rate for SME trade finance applications is really high. Typically, banks in Africa prefer to lend to large corporations. SMEs often struggle to gain access to trade finance due to a limited track record and lack of experience in foreign markets. One of the factors that affects both SMEs and larger corporations when it comes to seeking trade finance is the currency risk. The currency risk in trade finance relates to lenders' concerns around their funds getting stuck in a country in which they do not operate, or the fear of currency devaluation or a shortage of foreign reserves that may result in lack of payment. These fears are not baseless, as there are African countries with highly restrictive policies on the flow of foreign reserves. For some countries, it is difficult for foreign-owned businesses to recover capital brought into the country once it has been converted into the respective local currency. So foreign exchange shortages are extremely common too. You can go to the next slide, please. So I'll just quickly touch upon the potential impact of the Africa Continental Free Trade Area Agreement trade flows. Now, the expectation is that the adoption of the AfCFTA will increase intra-African trade to about 25% over the next decade. The agreement aims to create a single market for goods and services, and this will contribute to the development of continental supply chains, upgrading production, manufacturing towards more complex, higher value goods and services, reducing the cost of trade and improving competition and productivity. The AfCFTA has a dispute settlement mechanism for trade disputes, which offer mediated consultations between disputing parties. Now, this mechanism should foster cooperation among member states on investment and competition policies, intellectual property rights, and other trade liberating strategies. Another potential impact for the agreement is that participating countries would progressively eliminate import duties and potentially reduce bureaucratic bottlenecks. This will support a doubling of intra-regional trade. The AfCFTA should also contribute to sustainable economic growth, as it is expected to reduce the continent's reliance on external resources, encourage independent financing, as well as development. Next slide, please. So eliminating sticky points for Pan-African banks. Now, increased competition, adoption of stricter Basel III regulatory requirements, and new anti-money laundering standards have reduced profit margins and increased operational costs, thereby making trade finance unprofitable for smaller banks. Trade finance is document-based, and there is heavy reliance on hard copy paper documentation to process payments and facilitate the clearance and release of goods. This poses as a challenge for record keeping and storage. Banks in most cases are unable to apply needed flexibility in this area by switching to electronic documents, primarily due to regulatory constraints. Now, a solution is to use technology and create the enabling regulatory environment for trade finance technologies to be incorporated in these operations, as well as improve back office operations and create scalability, particularly for risk management and compliance. In addition, compliance with stringent international KYC, that's Know Your Customer, and AML, anti-money laundering regulations, is a critical reason for bank rejections of trade finance applications affecting access to trade finance for businesses in Africa. These regulations have pushed banks away from clients that present significant risks for less reward. Insufficient collateral by some SMEs prevents trade financing. Still, the solution to this problem could be found in structured trade finance, commodity finance, or supply chain finance, where you look at the trade receivables of these SMEs instead of historical data that may not be available. Regulators may struggle to keep up with rapid changes in financial markets as novel technology-based platforms grow, which we're already seeing. The onus is on policymakers to choose how best to balance the potential benefits of financial innovation and risks, and such innovation may attract while also bearing in mind the risk of stagnation and overregulation. Hence, one priority across African countries should be to improve the quality of regulatory oversight and public governance while harmonizing regulatory frameworks to facilitate Pan-African payments and settlements. Next slide, please. To comply with the World Trade Organization facilitation agreement, most countries have implemented single window customs processing imports and exports electronically through a single electronic website. However, the efforts vary widely regarding filing requirements and means. Sensors allow tracking of goods and data collection from mine farm to the ultimate sales outlet. So now new tools such as machine learning, artificial intelligence, blockchain-based distributed ledger systems, cloud-based computing and digital identities can help operational efficiencies and secure records. Blockchain systems allow for decentralized storage of information with high security and transparency. Machine learning and artificial intelligence offer empowered analytical techniques for businesses to extract value and implement the advanced strategy with their competitors. Now, the use of these globally available tools and the development of digital will operate seamlessly in nearly real time across borders and in a variety of fiat and digital currencies. No doubt, the ongoing pandemic has assisted with dragging digitization to the front burner. However, we must note that new technologies are not necessarily risk-free. If poorly managed, these technologies could induce a degree of financial or macroeconomic instability. Such risks, if not materialized, could end up being harmful, especially to the economically underprivileged. So that's it for my presentation. I hope I stuck to my time limit. Thank you so much for listening. Over to the moderator.
Thank you very much, Chinwe, for this very comprehensive and insightful presentation. It's important to sort of give some highlights of this. I mean, especially looking at the declining trend of African trade of late. Certainly a decline that has also been accentuated by the COVID-19 pandemic. It's important to note that we fortunately have also the African Continental Free Trade Area Agreement that has kicked in, especially in January this year. And that could then provide a broader framework and facilitate intra-African trade in many different respects. In terms of not just promoting the diversity of African exports, boosting trade and economic growth, and especially sustainable economic growth in the same process, facilitating a single market, and facilitating also the setting up of a framework for the resolution of trade disputes. And last but not the least, seeing that the African trade contents are more diversified in terms of including a bigger content of manufactured goods. So this is clearly a big opportunity for African trade at this time. But at the AfCFTA, as it's called, would provide opportunity, but there are also a number of hurdles on the way of growing African trade. We still have a few sticking points, and those have to do either with documentation challenges, regulatory challenges, AfCFTA challenges, access to finance challenges, especially for the SMEs, that cannot always provide the collateral requirements demanded by banks to provide the needed trade finance funding. It's also important to understand the directions of trade finance, especially embedding a number of new technology tools, whether it is machine learning and AI, blockchain systems, digital identities, as well as cloud-based computing. Thank you again, Chinwe. At this point, we would look into moving to discussing specifically, to start with, the sticking points that are standing on the way of growing trade finance in Africa, in terms of also Africanizing trade, more increasing the Africanization of trade on the continent. And for that, we have a host of panelists that I will be very pleased to present at this point, starting with Michelle. Michelle Knowles is the Pan-Africa head for trade finance product at ABSA Group. We also have Suleiman Diagne. Suleiman is the group head of trade finance and services at EcoBank. We have Nathalie Loy. Nathalie is Director of Trade and Supply Chain Finance at the International Finance Corporation. And last but not the least, we do have Blandine Gamblin. Blandine is the head of Trade Finance for Africa at Société Générale. So with our distinguished speakers today, we're going to be able to cover a number of topics. And for that, we'll start with the first question, which will be specifically addressed first to Suleiman. Suleiman, with AfTA, that is the African Continental Trade Finance Area Agreement kicking in, and meant to substantially address tariff and non-tariff barriers to intra-African trade. How do you see commercial banks playing a major role in fostering regional trade finance in Africa under the AfTA area? Give us a perspective as a commercial banker, as an eco-banker. Suleiman.
Thank you very much, Alain. And first of all, I'd like, on behalf of the EcoBank Group, to thank the organizers of this event. AfCFTA is obviously a theme of the moment, and at EcoBank, as a Pan-African bank, we certainly well poised to push on the agenda of 2063, and AfCFTA being one of the key deliverables. So as commercial bank and a Pan-African bank, we're certainly looking forward to our contribution and in basically fostering intra-Africa trade. So coming back to your question, it's actually a very important point, because AfCFTA does address limitation in terms of tariffs, but more importantly, one of the key sticky points as well in terms of trade is the non-tariff barriers. And I would say that commercial banks would have a critical role to play in basically, first of all, making sure that we foster affordable and effective cross-border payments. This is to be basically ensuring that we have efficient cross-border payments, and do so in a very efficient way and in a cost-effective manner. And saying that is basically, as a Pan-African bank, and if I take the example of EcoBank, we are present in 33 countries, so with participation in the clearing systems, that obviously afford us the ability to effect payment for our clients, but without any recurring to any correspondent bank intermediaries. And this obviously has a consequence in terms of cost. And we have basically substantiated this network that we have with an ability to first leverage on partnerships, NetBank being one in Southern Africa, and obviously push on our digital bank agenda. And I'm sure we'll be coming back to that. So on top of the aspect related to really fostering payments seamlessly across Africa, and on that note, I probably should also mention the initiative from Afrexim Bank, which is the Pan-African Payment and Settlement System, which is also a great initiative that we as commercial banks are fully supportive of. But once we set apart the point of making sure that we have an effective payment system across the continent, the other point to be really looking at is basically making sure we address the key target markets. You've mentioned it, SMEs, constitute 80 or even more in terms of percentage of businesses in Africa. So Pan-African banks being able to be on both ends of intra-African trade transactions should be basically leveraging on their knowledge base in terms of the client relationship and be able to put in place the right product in terms of financing these trades, leveraging obviously on the due diligence that they would have made with being in both ends of the transaction. One last point in terms of our role as commercial bank would be obviously to helping governments in making sure that they basically raise to the challenge of making sure that the logistical aspect of AfCFTA would be also taken care of. Because at the end of the day, goods would need transportation. So I think commercial bank would have a very critical role in basically fostering those investments, be it in infrastructure, roads, airport, ports, and we'll have a role to play in that one. Last point for in terms of our role would be obviously to help industrialize the continent. I think this is also one of the key objectives of AfCFTA. And in that respect, given that AfCFTA would be creating single continental market with 1.2, 1.3 billion people, it is expected that there would be a lot of investment. And we as a commercial bank would need to foster those investment into Africa and leverage on those investments to also build up the production capabilities and capacities across our continent. So let me pause there. A lot of things in our plate as commercial banks, but certainly, I'm sure we'll be certainly having the opportunity to discuss other aspects of this. Thank you.
Thank you very much, Suleiman. I guess this gives us a good perspective to start with from a commercial bank side. And it would be good to hear from Natalie as well on this topic, whether she sees things the same way.
Yes, hello and bonjour, and thank you for inviting AfC to join this distinguished panel. The African Continental Free Trade Area is a game changer for African trade. And as Suleiman said, it connects 1.3 billion people across 55 countries with a combined GDP of over $3 trillion. So we have estimated that it has the potential to lift 30 million people out of extreme poverty. And we expect the volume of total export to increase by almost a third by 2035. So intra-African exports would increase by more than 80%. That's really the significant point that we expect to be a major change, which will create new opportunities for African private sector companies. Banks will play a major role in facilitating intra-African trade by providing much needed financing for post-import and pre-export. And African banks need to expand their correspondent banking relationships throughout the continent. This is key to increasing intra-African trade financing. So it has been a priority for AfC to support intra-African transactions as well as African banks' activities as confirming banks. Our global trade finance program has issued over 70 billion guarantees in the past 15 years, and the share of African banks as confirming banks has doubled in the last 10 years. It now stands at 32% in 2021, and we expect this growth to continue. African banks' activities in promoting intra-African trade has been growing, and we believe that the African Continental Free Trade Area will create more trade finance needs due to the increased activities among the private sector companies. So we look forward to seeing the banks expand their African networks to accommodate this growth. This is a chance for African banks to enhance their operations in trade finance, and AfC is committed to support such ambition. Thank you.
Thank you very much, Natalie, for giving this perspective of a development finance institution that is actively involved in supporting trade precisely through the financial industry sector as well. Now, let's look at another side of the coin here, especially in terms of, having on the one side the opportunities raised by the AfCFTA, but also looking at, what would still be the residual challenges and pitfalls. And on this topic, we would like Michelle Knowles from ABSA. Michelle, to sort of give us perspective as to what does she see as being, the residual challenges and pitfalls that stand on the way of commercial banks taking full advantage of the free trade area.
Thanks, Elaine, and it's a great pleasure to be here today. I think if we look at what the challenges and pitfalls are, we start off by the acknowledgement that trade finance is a powerful instrument that, if well designed, goes a long way to fostering intra-Africa trade as well as regional integration. The challenges that banks face in taking full advantage of the free trade area is largely the same challenges facing trade finance in general. To make meaningful progress in addressing the trade finance gap in Africa, there's a couple of points that we need to address. The one is regulatory challenges. That's been mentioned a lot by my panelists, as well as comments that I see coming from those attending. But regulatory challenges have emerged as a significant drag on trade finance in Africa, with many banks listing these challenges as some of the main constraints to expanding trade finance. So we're speaking about know your customer, anti-money laundering, trade-based money laundering, as well as other regulatory compliance challenges that impact not just the regional and local banks, but also our corresponding banking relationships. This, in addition to higher capital requirements required for trade finance, place significant challenges on banks who are trying to provide these services to their clients, especially those that need it the most, the SMEs. There is, of course, the issue of availability of foreign currency liquidity and the impact that this has on accessibility to trade finance. And then, which was already mentioned, the data gap, which creates complexity for credit information systems. I think it must be noted there are many great initiatives underway by industry bodies, the development banks, as well as many others. We need these efforts to address these challenges and hence enhance access to trade finance, not just for SMEs, but also new trade finance clients. To solve this requires close collaboration amongst policymakers, banks, DFIs, and fintechs, so that the necessary synergies can be created and to better complement one another. Thanks, Elaine.
Okay, thank you very much, Michelle, on this one. And thank you for also having been very succinct on the question. Now, let's look at, the perspective of, international players, international, in the sense of looking at these global banking institutions, where we've seen some contraction in and de-risking in the past few years. But if we look at what Société Générale thinks about the question, and especially looking at what would be the role and strategy for international players at Société Générale, and how active would you be at Société Générale, given the reported contraction of international players during the pandemic? Blandine, could you give us your perspective on this question?
Yeah, thank you very much for this invitation. I am very pleased to be able to present Société Générale strategy in Africa. As you may know, in fact, in 2017, Société Générale launched an initiative, Grow with Africa, which represents our commitment to be part of the responsible development of the African continent. Through Grow with Africa, we are building, in fact, with local territories and players, partnership respecting the environmental and social criteria. Grow with Africa is built, in fact, around 4 axes, and these 4 axes will be part of the AfTA. The support for the development of African SMEs, which is key, in fact, in the frame of the African free trade area. Innovative financing, especially on agribusiness and renewable energy, financing of infrastructure, and financial inclusion. On the partnership side, we do have a close partnership with APSA. This partnership is very important to support the intra-African trade because we can cover up to 30 countries all together. And today, SocGen is able to send trade flows to APSA countries where we are not. And APSA is able to send to SocGen countries trade flows to support, in fact, the growth of their client. This is a very important partnership, and we are keen to work all together more and more in the future. Hence, in fact, Société Générale, with its historical presence in Africa, is essential and key, and is a key contributor to the African growth in a responsible sustainability way. So we are all committed to the growth in Africa, and especially in SMEs. And I will talk later on our strategy to support the financing for SMEs. Thank you.
Well, thank you very much, Blandine, on this perspective, and especially highlighting an important topic, which is the partnerships, which you've been developing on the continent with other partner banks like APSA. Earlier in the presentation, especially the Chinwe's presentation, we understood that the challenges of documentation, challenges of fragmentation of the markets requires a more deliberate engagement towards improving the platforms, the efficiency of the platforms for trade business in Africa. AfTA and the digital platforms are sort of offering the opportunity to achieve that. We're going to have, at this point in time, an interview with Sulema. Sulema Badi is the CEO of Congo, a trade finance platform operating out of Europe. Sulema would then give us a perspective about the efficiency of those platforms and talk a little bit about Congo, whom she's the CEO of. Sulema, thank you for accepting to join this panel. Sulema, a first question to you, Sulema, would be indeed following from the presentation of Chinwe, highlighting documentation challenges. What's your perspective about, how do you assess these documentation challenges as applicable to trade finance in Africa?
Hi, everyone. I'm extremely pleased to be with all of you. To build on what has been said, I think that trade documentation methods on the African continent are the same as they are anywhere else.
Sorry, Sulema,
yes.
Just to sort of mention that we cannot view you on the screen.
Yes, I was blocked.
Now,
thank you.
Okay, now
I could not turn on my video. All good,
great,
thank you.
Great. And you have a big logo of Congo.
Yes. So predominantly physical and paper-based, and we all know that the need of hard copy, original documentation, and wet ink signatures is very much there yet. And as many panelists said, complexity increases every year with additional compliance rules, for example, and many other rules that complexify our business. We all know that the pandemic prompted a massive shift in the beginning, as the management of physical trade documents just wasn't possible with remote workforces. So the industry had to improvise, and I think there's a general agreement that a lot of those quick fixes are not permanent, and we need to review and strengthen many of those workaround solutions. So the good news is that there is a momentum and a broader understanding that things need to change and that we need to go digital. However, this is nothing new. We all know that we've been discussing how to upgrade the system for many, many years now. And as other panelists mentioned, we struggle at the global level to implement many of the negotiated frameworks, which could bring standardization, uniformity, and a common language to pave the way towards digitalization. We all know that we also have bureaucratic constraints to consider. and that there's a huge range of factors that can hamper a firm's ability to access cross-border markets, such as infrastructure challenges, inefficient port operations, excessive document requirements, custom procedures, complicated border process, and all the pains we all face. In summary, I think in many places, trade documentation methods suffer from a lack of automation due to a non-digitalized environment. The diversity of practices in trade hinders access to market information and to business opportunities for small or new actors. There's something else we need to mention is that we also noticed that local banks are lagging the most in terms of digitalization, as only a few of them, ballpark 25%, think that digitalization will provide benefit to their operations, and only half of them think that it can bring any cost saving. This is mainly due to the perceived cost of change weighted against the potential benefits. It's less the case with major banks, which are way more convinced of the importance of launching their transformation journeys. So I think the key value we can bring is helping banks and corporates to quickly and easily reach a minimal level of digital maturity, which will allow them to streamline and harmonize the bureaucratic and legal frameworks around electronic trade documents, among others, and hopefully start to marry the international initiatives with the realities on the ground to implement a common framework that works for everyone.
Well, thank you very much, Sulema. And indeed, you've literally touched upon the next question I had in mind for you. I mean, focusing on the need for digitalization, but on the one hand, but looking also at how fragmented African markets are, it would be good to stress or emphasize how well we think digitalization is going to work within such a context of fragmented markets.
You're right. It's a bit of a chicken and egg situation, right? Fragmented markets struggle to find a common base from which to leverage fully automated digital workflows. But at the same time, the varying levels of digital maturity are a major blocker to the uptake and adoption of frameworks and legislation, which could energize trade on the continent and expand it to include new and smaller participants. But one could argue that fragmented markets stand even more to gain by going digital, and that such digitalization should bring homogeneity and consistency to fragmented markets. Let's take the example of SWIFT. It played a major role in standardizing the language and protocols around interbank exchange for the benefit of all. There is a strong evidence that technology can help countries leapfrog several stages in their development. We saw it, for example, in the consumer banking space with the advent of mobile banking in Kenya. It played a major role in accelerating service rollout to previously unbanked communities. I think we could be looking at a similar opportunity here, maybe not necessarily related to service coverage, but certainly with regards to streamlining and securing banks' operations and the execution of trade finance. These costs and risk savings may be passed on in the form of more liquidity or more coverage for unbanked institutions. And the first and most immediate gains will take the form of increased speed and operational efficiency. Finally, I think developing markets are too often passengers in any transformation process, which means they don't have a say in setting up the rules and have to follow what the market dictates to them. This might be the strongest argument for why these institutions must start playing a more active role in digitalization implementation.
No, understanding that the drive for digitalization goes beyond a sort of nice to have and becomes a must have, right? From what you just mentioned. But then there seems still to be quite some major barriers, especially in Africa, for the digitalization drive to take full steam. And what, according to you, looking at it from your own activities, stand on the way of facilitating this digital drive on the continent?
It's a good point, and we still meet a lot of companies who don't launch their transformation programs, even though it's a must, as you rightly say. So, for example, banks who don't have a digital strategy, which would help them be in a much better place to service SMEs with digitalization. Increased governmental support would also help a lot. One of the biggest reasons digitalization has not yet been adopted is the notion that a digitalized process can only ever reap the true digital benefits of its least digital link. If one party in the supply chain, such as a governmental customs authority, still requires physical or original documents with wetting signatures, then the entire process must be at least partly paper-based from the beginning. There's something important to mention is that we do notice digital fatigue amongst the users who have been spammed with technical solutions not answering their business problems. Technology is often seen as too costly, too futuristic, too risky, with insufficient real use cases and real added value for the users. So how can we overcome these challenges? Few feedback we have been learning in our journey. First one would be to make things simple, very simple. Companies often have the feeling that technology is simply not for them and view it as complex and costly. It is not true. When you launch your transformation journey, you can start with very simple milestone and track your progress and show the benefits to the company. The second one would be to say that small is beautiful. If it makes sense to say that developing globally accepted standards is key to remedy the digital island problem, it is not extremely pragmatic for companies on the ground every day. So let's start with answering to a very focused problem and show measurable benefits. The third one would be to focus on cloud computing-based solutions. I think it has already been mentioned before. It allows the delivery of computing services over the internet and to offer faster innovation, flexible resources, and economies of scale. Cloud computing is still just beginning to emerge in trade finance, but it has the potential to provide huge key benefits. It lowers the cost of using technology. It allows people to reach it from any kind of place, which is another key benefit. Bank level adoption is also an important one. And we've noticed it in our journey. Leading banks have to pave the way. And you have amazing Pan-African banks that have a huge added value in this setup, giving their existing network. I don't want to be too provocative, but I have another one, which is stop dreaming. New technologies are awesome, but they're not, you don't need them to be drivers of digital change, and they're not the prerequisite to any digital transformation. Standard secured technologies exist and solve all existing pain points. So no need to put yourself at risk with things that are not mature yet, and on top of that, extremely costly. And maybe the last one is to be sure that the solution you go for is scalable, customer-centric, and that it will solve large pain points.
Thanks a lot again for that, Sulema. And we know Congo has been generally successful in developing its trade finance platform. And it would be good to know, as we all wish to see Africa embracing it in full gear, what is the plan for Congo to expand into Africa?
Well, the best enabler of our expansion in Africa is our ability to demonstrate the value we bring to our customers, right? So we are here to listen to the needs of the customers and bring them the right piece of software they need to make it happen. Clients want bespoke solutions that can accommodate their specific workflows, right? And you want solutions which can integrate to your systems and enable real automation at scale. Most organizations here today have workforces distributed across many offices around the world, and they need systems of control with clear processes and responsibilities, instructions that can be signed, and removing wet tick signature where you can. This is something we can support you in. We want to avoid email where all information is fragmented and hard to find. Using a platform allows the users to have the same view of the transaction and everything in the same place in a very secured way. It is the first milestone of a common language or standard, which can drive interoperability between all the different systems. And clients want to forge trust and increase comfort and security for yourself, but also for your counterparties and lenders, since this is super key to unlocking new liquidity. So this is what the value we're trying to bring to our customers, and we obviously have to convince them to get it to the next step. Our expansion in Africa is driven largely by network effect, users promoting the platform one to another. Having all your banks or your customers on the same platform, playing by the same set of rules. The current network of Congo customers counts leading African trade banks who are early movers, paving the show, and showing step by step with us how this transformation will be a game changer. Thank you.
Thanks so much, Suleiman, for these very insightful contributions to the digital platform challenge for the continent. We have a number of commercial banks represented here, which would certainly share with us their experience of digitalization as well. Let's give the opportunity at this point to Michelle from ABSA. Michelle, it would be good to hear from you, how ABSA Group adopted a digital platform for trade finance, and what are the challenges that the ABSA Group have been facing in this process as well?
Great question, and an interesting lead on from the previous discussion. I think to start off with, we know that access to trade finance products is fundamental to the growth of international trade, and that's a key enabler to economic recovery. As ABSA, we have and we continue to see an increased demand for these solutions. So we have been accelerating our efforts to be a key driver of trade finance on the continent, and of course to be an enabler of the free trade agreement, which for us is a critical step in developing and increasing the share of intra-Africa trade. We focused on digitization of our trade finance products to improve the client's overall experience of doing business with the bank in particular, and thereby also increasing accessibility to the solutions. So digitization of our trade business has been top of mind and a key focus in our business over the past couple of years. We landed our client channel towards the end of 2019 in 12 of our markets. And we were really a couple of months into migrating our clients from either a legacy channel or in some cases manual processes. And up until then, our focus was really how to support our clients as they move from a manual engagement with the bank, really something that had been the norm, to an online system. Then lockdown happened, and suddenly we saw an increased need from our clients for digital solutions, as many organizations were impacted by staff working remotely. So access to the bank via the normal methods were no longer feasible. This wasn't, of course, felt just in the trade finance business, but it did help us to increase our adoption rate. Our system, which is the Trade Management Online, is a secure electronic platform that provides our corporate, our business banking and SME clients with a comprehensive range of functionalities. They can initiate, receive and manage the full life cycle of their trade finance products and services through the channel. This includes letter of credit, bank guarantees, import and export trade loans, and collections. They can do this from the convenience of their office or from their home, hence enjoying reduced paperwork and naturally, and most importantly, creating shorter turnaround. The base and foundation that we had spent the last couple of years creating also now gives us the ability via our API strategy to start connecting into the broader trade ecosystem and leveraging some of the new technologies that are out there.
Thank you, Michelle. And looking at another commercial banking group, this time the EcoBank Transnational Incorporated. Suleiman, it'd be good to hear from you what, in your own experience, we know the ETI group has been all out promoting digitalization in a number of businesses. And what, according to you, would be seen to be the key success factors for sort of the deployment of the digital trade finance in your operations?
Thank you, Anna. Great question. And as you know, EcoBank has embarked in the last 3 to 4 years into a very forceful digital agenda. And as we speak, 34% of our transactions are actually done on digital channels. And basically, we've achieved this result based on the very aggressive product launch And coming to your question in terms of, you know, what was the key drivers for success, I would say first to really echo Suleiman's point, it has to be relevance, right? All the digital innovation that we had or digital product that we launched were based on addressing a specific need. When I look at the mobile application, obviously being able from the comfort of your office or from the comfort of your home to create a free express account through the mobile application and be able to transact is obviously something that is attractive. So that's, I would say, relevance is the key motto, but I would also add, you know, the fact that it is very important to be able to have this solution to be affordable and scalable, right? And those two are linked in a sense that obviously, if you need to build up resources or expenses as the customers increase the adoption, then it defeats the purpose, right? So the ability to scale while maintaining a pristine customer service, and in the case of EcoBank, we've done it with really a lot of focus on you know, what we call a bot. We call it Rafiki in the case of the mobile application. Really, you know, the ability to really address first level support question from the clients, you know, to get the customer experience to be really a satisfactory one. So scalability, affordability, addressing the customer's need is obviously the, you know, things that are key success factor. But we should not overlook the need to really, you know, be all inclusive. So all our experience has actually proven that the more inclusive a solution is, notably, you know, through the fintechs and the solution that are brought in by the fintechs, the more affordable or the more relevant those solutions are, and the more successful they are as well. So being able to also bring in fintechs, and as we speak, we have our fintech challenge ongoing, and be able to also carry the regulators around, along, obviously, right? The ability to really, you know, be inclusive, bring the partnerships, be it with, like I said, the fintechs, or as well, including the mobile network operators, just so that we all ensure collectively that we address the customer's needs. Because the pie is great, you know, it's not about just, you know, increasing our own share, it's about really being inclusive, and we are certainly leverage a lot on partnerships to really meet these objectives from a digital agenda. Thank you.
Well, thanks again, Suleiman, and that sort of gives us the way now to tackle the last topic of this debate, which is, again, you've heard about regulatory challenges, whether it is on fostering trade as a whole, trade finance, but also fostering digital trade across the continent. On this topic specifically, we would like to first hear from Natalie. Where would you see the major regulatory challenges standing on the way of enhancing future trade and trade finance across Africa?
Yes, thank you, Ala. So as the world emerges from the COVID crisis, we expect three dynamics to be potentially at play. We see a risk hangover from the crisis. We see a move towards trade with trusted counterparties to avoid fraud. And we see the push towards digitization, which my colleagues have discussed. And we agree with the previous panelists' views that digital technologies have the potential to accelerate the expansion of trade finance. We see that it can promote greater inclusion. And so that is an area that we have been looking at closely, and IFC has developed relationships and started working with several digital platforms. So in this era, national regulations will need to accommodate the digitalization of trade processes. Regulations must eliminate requirements for trade documents to be in paper, hard copy format. And the adoption of electronic bill of lading, for example, is a major step in that direction. So the World Bank is assisting some countries to accelerate these processes, because digitization is not simply a matter of investment in and adoption of new technology. It also needs a complementary soft infrastructure, which is regulations, administrative structures, banking services, skills, and market practices. So customs authorities are increasingly partnering with tech companies to simplify processes. So we will see more and more private sector companies embrace digitized open account trade, and even SMEs, which face much more significant constraints, are adopting digital solutions to access trade finance. So we intend to strengthen our technical assistance program to assist African countries in moving to digital trade. Banks are increasing their offerings and partnering up with tech companies and digital platforms. And we are already starting to work with these institutions to promote access to trade finance even further.
Well, thank you, Nathalie. And we'll then hear from Michelle, her perspective on the same regulatory challenge. Michelle?
Yeah, I think it's such a pertinent question. And we spoke about some of the challenges banks face to take the full advantage of the free trade agreement. And I think what is important to note is while we did see a decline in the size of the trade finance gap by around about 2019, we know that significant challenges remain. And SMEs, who are the most significant contributors to the African economy, still face the greatest challenge when trying to access trade finance. Compliance with stringent anti-money laundering and know your customer measures, along with the new Basel regulations, have really imposed higher costs on financial institutions in the trade finance sector, leading to fewer banks engaging in trade finance activities. And by default, this affects access to trade finance for the business who need it the most in Africa. We know that SMEs are the hardest hit, and whilst they continue to have the highest rates of rejection to trade finance. And this is a direct result of creditworthiness and insufficient collateral that really have become structural challenges for banks engaged in trade finance activities, by extension, their clients too. So to address these, we need to ensure that we continue raising awareness about the impact of these regulatory requirements on the bank's ability to provide these critical solutions. And this does require a lot more engagement and collaboration at an industry level with the policymakers. We also need to see greater support from DFIs to support SMEs. And I think we're really starting to see this with a lot of the DFIs looking at specific liquidity and support programs that focus on SMEs. And then I think to the point that my colleagues have made, to really enhance and ensure that we get the benefits of digitization and that this actually delivers increased accessibility, we do need to see greater regulatory support and also make sure that we address issues around standardization and interoperability. Thanks, Elaine.
Oh, thanks again, Michelle. And the last word here on this question would be to Suleiman, but specifically to help us identify which are the policy areas that would be more conducive to enhancing the innovative approaches to regional trade finance across the continent.
Thank you, Alain. Yes, certainly, I think a couple of panelists have actually touched on it. SMEs are at the heart of our business. And when we look at some of the statistics, I was actually looking at some of the a recent report issued by the African Development Bank. If we look at SMEs, they are actually representing 50% of the GDPs across the countries. And when we look at the part of trade finance that are going to SMEs, we're looking at 28%, while the SMEs, as we know, represent 80% or more of businesses. So it is critical that we really approach these SMEs and address this point. And I think one of my colleagues have actually touched on it. These rejections related to AML and KYC aspects are actually something that is a rising trend, and that report is actually citing 60%, which is great, which is too much, obviously. So at EcoBank, I think what we've done is that we have actually identified 3 pillars, along with some of us, with our partners from the African Union Development Agency, AU NEPAD, to really help SMEs go over these barriers, basically covering, building their capabilities, right? Ensuring that they know what is required in terms of documentation. They've also formalized, because I think a lot of the restrictions are also related to the fact that they are not very much formalized and are not well accounted in the documentation requirements for banks. So a lot of focus has been done in basically building up capabilities, and we've actually had a cohort of graduates that we just had last week, 200 graduates on this program, where we basically helped them basically get ready to really engage on the trade finance part. The second point is obviously market accessibility, and this is done through AfCFTA and the national AfCFTA country plans, ensuring that basically we leverage on these expanded opportunities to really give access to SMEs. And we know that SMEs are most likely led by also women-led, or also impacting youth and employment. So a lot of focus has been also done to ensure that we do have the right focus and capabilities around that. Last point is really, to your question, in terms of fostering digitalization, is really, a bank like us, EcoBank, present in 33 countries in Africa, on top of our international presence, is really to be able to foster innovation and cooperation through the availing of a sandbox, basically allowing potential partners in terms of fintech, etc., to be really working with us to create the right solution. And some of them have been discussed around digitalizing trade. So these are some of the key points that I thought I could touch on to basically contribute to that point. Thank you.
Thank you again, Suleiman, to add your perspective to this issue of policy area and regulatory challenge. We would now move on to the Q&A sessions. We've had a number of questions that reached us from the registrants earlier, and we will get started with those questions. And should we be able to address all these questions, then we'll take some additional questions that we got through the Q&A box of this Zoom call. One question would be, the first question would be addressed to Blandine. And Blandine, a question from the registrant is, but a lot of articles have been written around challenges facing SMEs, but no one seemed to have granular details of what must be done. So any ideas, Blandine, as to what must be done there for the SMEs?
Yeah, thank you for this question. It's very important for SocGen to present the initiative with the creation of the House of SMEs. I can see on the web many questions related on how concretely we can support the financing of the SMEs. SocGen has created 8 House of SMEs in Benin, Burkina Faso, Cameroon, Senegal, Madagascar. We have 8 countries having those House of SMEs. House of SMEs is a premises where the SME client or non-client of Société Générale can come and have some expertise, advice with audit firms, insurance company, funds, a lot of external actors, even the local one. There is some agencies supporting the SMEs in each country. These are all present in those houses through conference, webinars, physical meetings. And the purpose is to talk with the SME and help assist the SME to build a business plan and financials in order ultimately to be bankable and get a credit limit. So it is very important that the audience today and the SMEs, because I can see the questions, go to those house of SME and try to see how we can assist them building their projects with all local actors, and they are numerous because, as you know, France has launched also the initiative Choose Africa with Proparco and BPF France. They are present also in those house of SMEs to support the financing through some fund and fund of fund supporting in the agribusiness climate change. So I warmly recommend those small entities to visit. In fact, those houses, it is a co-working space, and there is also mentoring with other SMEs on the same sectors.
Okay, thank you very much, Blandine. Would you sort of highlight, from your perspective, what can be done to really ease out this acute trade finance pressure for the SMEs?
Yeah, the purpose, in fact, for those SMEs is to ultimately get a financing. But for that, there is preliminary stage to fulfill, to become creditworthiness. And for that, we are assisting the SMEs to build, in fact, all their business plan in order to get a line for their investment and for their growth. And those houses are here to ease the financing for those small firms, which comprise of 80% of the network in Africa. This is a very concrete answer to ease the financing.
Okay. Well, thank you very much, Brandy. Let's move on to the next question. This one primarily addressed to Natalie. We'll also hear from Michelle after that. Should trade finance be regulated by Financial Services Authority? And to what extent are trade finance methods adequately regulated and standardized across the continent?
Yes, thank you, Ala. So for this, I see in the questions also, there are lots of questions about, the issues of convertibility. And it's true that, all these points relate to the overall macro conditions in the countries. And so the objective to grow the trade within Africa requires a good alignment of the policies and the regulations required by the market. So it also allows me maybe to broaden the conversation to other requirements, which are, the development of the infrastructures in the countries. We know that it costs actually more to ship a vehicle from East Africa to West Africa than it is to bring a car from Asia to Africa, which makes no sense. So there is also a need for these countries to improve the infrastructure and improve the ports. It's believed that Africa's port productivity improvements could lead to great improvements in trade flows. So combine, what the governments can do on the macro front and on the regulatory front with some work on the infrastructure, you will really see the benefit that the economic growth that can be originated by the African continental free trade area. And that's really what we're looking for, public-private partnerships to see all these areas develop. And we, IFC and the World Bank more generally, intends to support these efforts.
Okay, thank you very much, Natalie. Your perspective on that same question, Michelle?
Great, thank you. And again, a great question. And Natalie has really touched on the infrastructure challenges faced. I think there's no doubt that the increase in regulations that we've seen in the last decade has impacted banks' ability to address the global trade finance gap, as we've noticed through the different discussion points today. There has to be regulations that ensure stability and trust in financial institutions and the products they offer. So I'm not sure if it is an issue of should trade finance be regulated or not, but more that the impact of the regulations on products like trade finance that are so critical to economic stability and growth are properly understood by regulators and policymakers. There was a very interesting recent white paper done by the ICC, where there was a call from the trade finance industry for regulators to clarify and align regulations. This speaks directly to the issues that we've raised around the anti-money laundering, know your customer compliance requirements that ensure or force all banks to increase their resources, heighten risk management, and at the same time reducing banks' trade finance capabilities. It's also impacted correspondent banking relationships. And this links developing economies to the developed economies. I think, again, there are lots of great initiatives underway by the various parties, lobbying regulators and policymakers to ensure that they clarify and streamline their banking rules, and also for banks to strengthen correspondent banking relationships, both which are necessary efforts to connect small, medium businesses to trade finance in emerging markets.
Right, and thank you very much, Michelle. Another question this time would be for Blandine. Whether has de-risking from international banks reached a plateau, and is there more space for niche players such as trade funds?
Yeah, sure. I mean, as we know, the gap in financing is very important, and we can see more and more funds investing in SMEs. So yes, there is space for those funds to support the development of the SMEs, and we are participating in some of those funds. So hopefully those funds will increase, and they are present in the House of SMEs also to put some equity in some startup and small SMEs. This is also actors with which we are closely working in order to better assist this ecosystem. So yes, definitely there is room for trade fund.
Thank you very much, Blandine. There's this question about infrastructure. Natalie, you touched upon it already. Would you want to re-emphasize, or should we consider that this is already addressed in your previous response?
Well, listen, I mentioned ports, right? But you can include in that discussion the improvement of rails and roads and highways, because the infrastructure deficiencies raise the transportation costs, and ultimately it negatively impacts trade costs. So that you can see it more globally than what I had first mentioned.
Okay, well, thank you, Natalie, on covering this infrastructure topic. Then another question, the last one, the registrant, is on the strategy of Pan-African banks in supporting locally owned companies in facing the challenge of foreign conglomerate. Suleiman to give us his perspective on this question, and then Michelle.
Thank you, Alain. Yes, I actually did touch on it. Strategy really from a Pan-African bank that is present in all these countries, as I mentioned, 33 countries in terms of banking operations, but also some representative office, so 35 in total. But why I insist on this presence is that it gives us the right knowledge base. And once we have the knowledge base and the relationship at both ends of the transaction, then this reduces the due diligence cost in terms of making a credit decision. It's not like an entity sitting outside Africa making credit decision on Africa, but it's really us looking at our own constituencies in terms of businesses and taking the right decision. I was actually talking to a client in Guinea who was saying, look, what do we do? Because there are banks that are already cutting on cross-border risk from a correspondent perspective. So for us, it's really being within the terrain with our clients and ensuring that we can basically broker those. And the main, once we establish that the SMEs is actually the key target for us, the main objective is basically leveraging on the global corporates and the regional corporates, you know, the Dangotes of the world, the MTNs, etc., to make sure that we can leverage on the credit relationship from those global or regional clients to really put together the right supply chain finance solutions, basically leveraging on those credit enhancements. So it's going to be for us a move really from a balance sheet based lending, where we'll be looking at audited financial, etc., from actually putting in place solutions that are basically ensuring that we have self-liquidation of our transactions and basically allowing both the SMEs and their own clients to basically improve on their working capital management. Because what those supply chain finance solutions do is that they allow the suppliers to be actually extending the terms of getting quick financing on their receivables, and allows their own clients to also extend the terms of payments, which should be great in basically expanding the capabilities and improving the capabilities in terms of sales management from these SMEs. Thank you.
Okay. Michelle?
So how do Pan-Africa banks support their clients? I think, boosting intra-Africa trade and deepening of Africa's market integration by fostering competition among African countries will assist them in enhancing their capabilities and prepare them to compete more effectively on the global market. So access to trade finance enables SME engagement in these international activities through direct exporting and participation in both global as well as regional value chains, and ultimately foster inclusive economic growth and innovation. The access to the trade finance solutions will both be those that help mitigate risk, but also provide liquidity and working capital to these companies. So help them navigate the complexities of cross-border or even, as I mentioned before, intra-regional trade. The majority of banks, including ABSA, are looking to increase accessibility, ensuring these instruments are more accessible to those that require it, by a multi-pronged approach, partnering with various DFIs such as the IFC to ensure that we're increasing liquidity available for financing. We're supplementing this with digital capability. And then, as Blantyne mentioned, also strategic relationships like that with Societe Generale that increases the reach of the solutions across the continent. So I think there is a lot being done by Pan-Africa banks, and we really encourage everybody to reach out and ensure that you are engaging with your bank to understand the solutions that are available to support you.
Well, thanks again, Michelle, on this specific topic of how do we address the challenge of the SMEs involved in trade, as well from an ABSA perspective. This brings to a close this webinar session, for which I would like, on behalf of the efforts of the Africa Financial Industry Summit, to thank you sincerely for your time, participation, insightful contributions to this key topic of how do we address, how do we help bridge the sizable trade finance gap in Africa. The gap is wide, as mentioned by Chinwe, $81 billion at this point in time. the trade is declining, and the pandemic has actually accelerated the decline. But then, fortunately, we also have the AfCFTA, which Advent is giving, offering the continent a framework and a platform to enhance its intra-regional trade, so far considered to be weak, below 20%. But then to take advantage of AfCFTA, there's still a number of hurdles on the way of boosting trade on the continent. These hurdles are regulatory, the hurdles are documentary, the hurdles are also in terms of how the main trade finance actors, the SMEs, are given support, but also in terms of platform. Data is a challenge, fragmentation is a challenge, payment is a challenge, settlement is a challenge. So how does the continent embrace the digital endeavors? How do businesses like Congo thrive on the continent? And how do the various players in this field, whether it is the commercial banks, the DFIs, the regulators, the industry as a whole, collaborate to enhance a suitable platform, an efficient and cost-effective platform to digitalize the trade on the continent? Because it is a must-have today. It is the way to be more efficient. But then embracing the digital trade is not enough. It has to be affordable, scalable, adaptable, and also, and no less importantly, driven by customer-specific needs. These are the ways by which we can contribute to curb the gap, or the wide gap of trade finance on the continent. So thank you a lot for that. We would like to also mention that IFC as a co-host and EcoBank as a partner to this event should please receive our warm thanks for their active contribution to AFIS. We would like to, at this point, announce that we're going to have a face-to-face event of the Africa Financial Industry Summit and in the Q3 of 2022. But in the meantime, we're going to have the next webinar on the 23rd of November. And the theme is no less attractive: financial inclusion and SMEs. Some of these topics were touched upon here. We're going to emphasize on financial inclusion and SMEs on the webinar that will take place on the 23rd of November, how to diffuse the risks. And this will be advised to you in due course in terms of registration details. And it's also important to get your views, your feedback of yourself, of the wider audience that we cannot help thanking here sincerely. As we aspire to continuously improve our digital events, your feedback is invaluable. We'll be grateful if you could spend a few moments to complete the short participant experience survey that will appear on the screen shortly. We would like at this point again to thank you everyone. Just giving a few seconds for the survey link to appear, Oliver and team. We would also like to apologize at this point that some of the questions that were asked through the box could not be all responded to. We want to assure you that should you be able to link us to us by email or social media, we'll make it a point to connect with you and bring some elements of response to these various questions. At this point, and we would then again like to thank everyone for your active involvement, and we'd like to bid goodbye and a big thank you again to the wide audience that supported us for this event.